Welcome to ETF Wrap, your weekly digest of the top stories in European ETFs. This week, the ascension of active ETFs continues, with new products, listings and providers entering the space. Elsewhere, a reminder that fees are not everything, as one ETF outstrips the inflows of lower-cost rivals. And finally, fund selectors reveal how they're using ETFs to target opportunities in China's recovery. First, the fervour surrounding active ETFs continues, with new issuers and even regulators being convinced by the product class. This week, Milan-based Horizon Capital announced it was awaiting approval to launch an active ETF targeting the UK market. The asset management arm of Intesa Sanpaolo currently manages around 392 billion euros of assets across its suite of active mutual funds. Elsewhere, a slew of active ETFs are expected to list on Euronext Paris for the first time, after a recent update to AMF regulations. This week, AXA announced it had listed 5 active strategies in Paris, with BNP Paribas following suit with its 2 debut active ETFs. These updates came after BlackRock caused a stir before Easter, with the launch of its first active equity ETFs in Europe last week. Next, a reminder that fees are not everything, as BlackRock's S&P 500 ETF pipped a rival from State Street in Q1 flows, despite charging more than twice as much with its headline rate. BlackRock's candidate pulled in $4.7 billion of new money in Q1, ahead of the still impressive $3.4 billion amassed by its State Street counterpart. BlackRock's S&P 500 wrapper remains the largest ETF in Europe, with its scale offering benefits such as tight bid-ask spreads. However, State Street's ETF has been a success story, with assets surging from $5 billion to $12.5 billion since its fee was cut to 3 basis points last October. Finally, China's long road to recovery presents interesting tactical opportunities, which firms such as Pacific Asset Management are capturing through ETFs. CIO Will Bartley told ETF Stream the softening of the 3 red lines debt rules has boosted the country's ailing property sector. Meanwhile, respite from regulatory clampdowns has supported a comeback in Chinese tech equities. Targeting these opportunities, Pacific has tactical positions in Tabula's Asia High Yield and HSBC's Hang Seng Tech ETFs. And that's a wrap for this week. Thanks for joining us and hit subscribe to keep up to date with all the latest in ETFs. Until next Friday, take care.